All right, let's talk about the federal issues. We're going to Capitol Hill now. FTC red flags, privacy policy, it's a penalty of $3,000 per incident if you don't have an identity theft policy in a small business or a nonprofit in the United States. So you're at risk. There is resources. If you go to our website and just put in FTC red flag, you'll see sample policies. CPA firms are exempt if they're AICPA members. That's the way that went down with the FTC. Tax preparer registration and the P-10, I know the P-10 drove everyone crazy, could have been a lot worse than it ended up. And I think the Institute has done it about as good as they can. They did the same thing we had to do in Maryland and fight the same battle. This is about earned income credit fraud, consumer issue. IRS said we have to address it. They did the same thing Maryland did, create this new tax preparer registration, and that's where this whole P-10 thing came out. At the very beginning, they had CPAs in and all of your staff. In fact, they said that if someone licked the stamp that went on a tax return that was going to be filed, they had to be registered in the P-10, take the exam, and subject to the rules of the IRS. That's how bad it started. We went to hearings for all summer. Institute was at talking to the IRS. They finally backed them down, so CPAs are exempt, and your staff are exempt unless the staff are actually making decisions. So if they're deciding what goes where and what you should be reporting, then they're considered a tax preparer, and they're going to have to get a P-10, and they're going to have to take the exam if they're not a CPA. You have to have an active license to be exempt. If you're a CPA in industry who moonlights for family and friends and you sign the return and get paid for it, you have to have a P-10, 6425 registered with the IRS, and you'll be exempt if you have an active CPA license. Make sense? That was a huge battle. It took us about 2 years. All right, how many people were upset about 1099s, right? They snuck that into the Health Care Act. Then they snuck it in again in at the last month of 2010, right? In that, whatever the heck that was called, the Small Business Tax Credit Act or something, was 1099s for real estate rental properties. All right, so that went through 3 rounds of Congress. Two voted down. When the new Congress came in, it passed. So 1099s are completely repealed at both the healthcare and the rental real estate level. Senator Mikulski and Senator Cardin did not like that. In fact, they did not want to vote. We had a lot of letters from members and our letters that made them change their mind. Anyhow, that was a big one. Tax strategy patents. Did you guys know it's illegal to file a Roth IRA conversion on an Excel spreadsheet? It is, because there's a patent filed for that. Some attorney, CPA, did a spreadsheet out of the IRS code, said here's how you calculate a Roth IRA, right? You do put this in, you do that times that. And they filed a US patent for that and got it. So that means if you file the same calculation out of the tax code, you're filing illegally under the Patent Protection Act. And you could be given a cease and desist order, and you could be sued for patent infringement. You didn't even know that, right? Well, we've been trying to stop that for about 8 years. And we actually now are this close to fixing it so that you're completely safe. Then our Dodd-Frank thing. Here's our Dodd-Frank comparison. Sarbanes-Oxley was 66 pages, 16 rulemaking and 6 studies. Dodd-Frank was 2,307 pages, 355 rulemaking pieces, and 68 studies represented. So the problem in legislation is when they define things unintended and it involves us. So in this bill, this is where we got called in the financial planning industry, and that's where that registration idea came from. And we've obviously got you exempted from that. But that's how this stuff can happen. It's usually not by malicious things, it's by unintended consequences. But what worries us is that every one of these things, as they get implemented, could have another chance of a bad definition or a bad impact on our profession. So we have to watch every development of those kinds of goofy things. And then 3% withholding, how many of you guys know about that? That came from our government contractors. The AICPA's Government Contracting Committee also. We wrote a letter to Congress on that, and that's now starting to move. And so now what we're doing is trying to delay it and then kill it. So that's what's going on. But the federal government is saying, well, this is another cash flow thing, then we could use the cash flow, and we don't care that it might put contractors out of business who only have a 3% margin. But so we're actively working that one at the federal level.
So here's our new math, right? And I did this on a basis of like a partner. But if, as a CPA, you would have had to register with the CFPA. It's $250. You would have had to register as a tax preparer in Maryland. That was $150 at least. The debt counselors ranges between $150 and $500. We're not sure where I gave the low end there. Mobility, other state licenses that you would have had to continue to maintain, at least $500. And that's a total of $950 that we were able to kind of save you per year forever by beating these key things that have happened. And if you take into sales tax based on a gross receipts of around $350,000, that's $22,000.
The value of MACPA membership, priceless, if we work together and use it.
All right, so here's what's coming up. Tax due dates. Now, the issue here is the partnership due date actually is after the corporate filing. So if you're a corporation that receives partnership income, you might not get the K-1s until after the due date. So we did put an act in that would actually stagger all the due dates properly. So it's K-1s first, then corporate and individual, right? Individual staying the same April 15th, but that's what's been proposed. And that tax strategy patents has actually passed both the House and the Senate, 2 different versions, and they're being reconciled right now. But right now, we're going to treat tax patents like medical patents, which is you can have a patent, but it's not enforceable. That's true. It's a marketing idea, but you can't go suing people for doing Roth IRA conversions. Tax simplification, the AICPA has weighed in on it. We have done that in Maryland to no avail, but we at least keep talking about it. Tax preparer register we talked about. Mobile workforce is the other one. So the rule, many states now, if you work one day in that state, you have to pay tax in that state, non-resident income tax. And there's a congressional bill to override that called the Mobile Workforce Bill. It will allow you up to 30 days in continuous or contiguous service. So you could work a series of days that equal 30 and not have to pay tax in a given jurisdiction. That bill is just starting in the House right now. We expect sales tax on services. We expect the millionaire's tax to come back. And they've actually put in what they call this throwback tax, which is a corporate gross receipts tax. That means even if you're losing money, but you have revenue, you will be paying tax. And we think that's crazy in a weak economy. We've done most of the really heavy lifting, like Safe Harbor was a big one this year. So we're going to really watch this tax on services and the bad tax stuff. We're watching comparative fault, this liability issue that trial lawyers want to make it easier to sue businesses in Maryland. That's a constant. And we expect, again, this really big tax push this year. So if you don't want to have these tax issues, you're going to need to help us in September, and we're going to need you in Annapolis on January the 18th. I mean, we had 150 CPAs there last year, and that's the reason we passed all these bills. We didn't have to write any letters, because one quick visit, even if you don't know your legislators, we'll make sure you match you up and get you there. Okay?
If there's one event you go to that you can really make a big difference, it would be CPA Day, because that event is in front of the Department of Labor Licensing and Regulation and all of the officers of the State Board of Public Accountancy. And so if they see a big support and attendance from CPAs like you all, that makes an impact on them, and it makes our job much, much easier when we're trying to influence regulations, stop bad ones, enact good ones, those kinds of things. Same kind of game, but at the regulatory level.